What's going on, guys? How is everybody doing? Good evening, good afternoon. It is 12:05. I hate coming on with that stupid radio voice. That's like a thing. I don't know what it is. People who are like on camera or being recorded, like people doing interviews, people telling the weather, they go into this weird tone, and it's almost like it's natural. So it's easy to fall into that. So how's everybody doing? There should be sound now. You can hear me, right? Okay. Howdy, howdy, howdy. How is everybody? Looks like this is one of the emptier streams so far. Okay, that's kind of disconcerting. But how's everybody doing? We have a fair amount of people in here, but normally we start off with what seems like a lot more. Either way, it doesn't matter whether we have a big group or an intimate group. I don't really care. I could talk to myself all day. God knows what I do. All right. So, okay, happy Wednesday, right, everybody? It's the middle of the week. Okay, Weifu, Pascal, Jakey, Jack, 82. Okay, Jack, X Factor. Howdy, howdy, Ripcord, Captain Youth. What's up, man? Captain Youth has some good music. So I'm gonna Captain Youth share that. And I'm not one for like the kind of hip hop that I used to listen to, but Captain Youth has a song that he sent me on YouTube, or rather on Twitter, and it's pretty hard. Honestly, it's pretty hard. It's a really good gym song. If you're crushing the deadlifts, it's pretty gangster. I gotta say that. So Captain Youth, share that link in the chat. I wasn't sure if I could play it because due to YouTube's sort of very strict algo and picking up things that are infringing on copyright, I didn't want to start the video with any song, but yeah, we'll feature it for sure. Okay, Jack, John, Jack. All right, bunch of redundant. Cool. John, Austin, Texas. What's going on? Zimin, Beach Ball. All right. So we have a decent amount of people viewing. Okay, let's pull that up. Okay, let's see, Captain Youth. Where is it? It is 4/23. Oh, that's not it. Oh, it's 1 second. This song, I like this, man. This hits. This definitely hits. Gotta get into it, though. Gotta get into it. All right. Got so much from me on resolution on volume profile. That's awesome, man. I'm not gonna play this during the stream, but this is I get down with this. This is Captain Youth in the chat. So if you like this kind of music, if you like getting in a good workout, go ahead and check this out on YouTube. I would play the entire thing, but I think that most people are here for the analysis. So, everyone doing well? Okay, Ryan, chart on Aave and SNX, please, if you don't mind. Yeah, man. Hey, I like that song, man. I used to really love hardcore hip-hop back in the day, like Big L, Papoose. I've just kind of grown out of it slightly. 35-year-old guy driving around listening to Papoose. It turns some heads in a different way that it did from when I was younger. Okay, so this is the Wednesday stream on behalf of my partner Josh Rager and myself, Canner Clark. My name is Ryan, also known as Canner Clark on Twitter. Just want to thank you for tuning into the BlockRoots YouTube stream. We do these 3 days a week: Mondays, Wednesdays, and Fridays. Mondays are kind of all over the place. We talk about a little bit of everything, and then Wednesdays we specifically get into Bitcoin. More interested on the lower time frames on Wednesdays than on the higher time frame, right? On Mondays, we sort of unpackage everything that is transpired over the weekend, which for the most part is a limited activity period because the weekends are a little bit thinner, a little bit lower volume. So today we're going to go over Bitcoin. I'm going to go over a new feature that Phemex has. So obviously we are partners with Phemex. Phemex is the fastest cryptocurrency exchange right now. They offer feeless spot trading and they offer perpetual contracts, so perpetual swaps, which are essentially like futures, but they don't have an expiration and you can apply up to 100 times leverage on something like BTC. you could also trade the new DeFi pairs. So what Phemex actually has now, you could go to Phemex.trade. They have, let me back it up. Okay, I was logged in. Here we go. I have this Phemex videos account. There's really no BTC on it right now, I don't think. But in the case that we want to show off a feature, I just log in and use that. So Phemex is institutional account program. So pretty much like a lot of other exchanges, I think this deal is probably a bit more superior in the sense that they offer a much lower maker, a much lower taker fee over a certain amount of volume. So if you're trading frequently, if you're a scalper, you'd be surprised how fast you can get over this 30-day volume, amount. So it's not like, if you're trying to, let's go for the standard right now. Let's say that's under 3 million contracts traded. That's not you trading consistently with 3 million contract positions. That is your round trip total back and forth exceeding 3 million contracts. So, if you take a bunch of trades, you'd be surprised. If you're using 50,000 contracts, you close one trade out, that's 100,000 contracts, right? 50,000 one way, 100,000 round trip. So this is something that caters to some of the larger traders. So for those of you that swing a little bit larger size or are playing with a little bit more, you really should try to take advantage of things like this. And this is not something that is necessarily unique to Phemex, right? So again, we're partners with Phemex. We work directly with Phemex. This is essentially like me promoting for Phemex, right? We have to get that out of the way. But this is something that if you're trading large size in the crypto space, you're doing exchanges a favor, one, if you come on and provide resting liquidity. You're helping make the market. You're helping provide a bid and an ask for participants. So that's something that makes an exchange attractive, right? When you have that liquidity near the current market price. So if you are trading with size, right, if you're trading reasonable size, there are plenty of ways that you can be essentially compensated or at least have a little bit of this cost reduced by taking advantage of some of these volume thresholds, right? So if you have, you trade over, for example, on Coinbase is kind of rip off to people unless you're trading frequently, and then in that case your fees begin to substantially drop off. So go to Phemex.trade. The purpose of going to Phemex.trade is that is the link that we provide, and that link comes with a discount already on your trading fees. So if you're trading frequently, you're likely going to be you're likely going to be transaction cost sensitive. So this is just something that is good to be aware of. So that aside, okay, we're going to look at Bitcoin today and make sure. Okay, so we have a decent amount of people that finally have hopped in. We're going to look at Bitcoin, then I'm going to take some charts. I just want to go over some of the more recent developments. I think it's always it's always fun to go over. It's always fun and important, I think, rather, to go over some of the more recent news. And sometimes it's fun because sometimes it's ridiculous stuff. And in this case, it's actually some pretty serious developments. But, we have a good amount of viewers, but we don't have a lot of likes. And you know that the only reason I do this is because I have such low levels of dopamine in other areas of my life that I come onto YouTube in order to satisfy this sort of empty space in my life. So I'm going to need you to hit the like button, go ahead and subscribe to the channel. And as soon as I feel that little bit of a hormonal adjustment, I will go ahead and proceed with the rest of the video. Yeah, you know what? I'm not even going to ask too much, guys, because for some reason, I am, this stream has less viewers than normal. Okay, and the last video got taken off, and I don't know why the last video got taken off, but apparently it was it raised a scam concern. So all I'm thinking is last video, I normally, when I do the live streams, when you go to start a live stream, it says, would you like to use the last template? And the last template is just, it's all stuff you fill out in the bottom of the stream. It's like, hey, this is what we're going to be talking about today. These are the links, the companies we work with. You've seen this under most YouTube videos, right? Most content producers, most of the, traders that come from Twitter and have created YouTube channels. They put the things that they're either working with below or that they're interested in below, a little bit of a synopsis. You understand, right? So one of the things, and then it's convenient to always reuse the template because I don't want to write that shit over and over again. So most YouTube videos allow you to save that template and apply it forward to all your videos that you create afterward. So what I did 2 videos ago was I gave away $100, right? We always give away $100. For the most part, more of our videos, 80% of our videos we're giving away $100. And in this video, I'm going to do a giveaway. I don't want to say it even because I feel like that's what raised an alarm. So the last video, the template was the same as the prior video, and it said, in this video we're going to do a $100 giveaway. And during the last video, I said we're not going to do a giveaway in this video. I neglected to pay attention to the fact that I didn't omit that portion on the the video summary. So that came up as a scam, right? If you create a YouTube video and you use something in the header or in the picture and you try to gain attention because of that or based on that, and then you don't allude to that or you don't touch on that or nothing relevant comes up with regard to that, then of course that is misleading. But I completely just forgot. So, to make the YouTube gods happy, we're going to go ahead and today's winner will win $200. How about that? So we'll make up for the mistake because that's how we roll. Okay, so by the end of this video, someone will be walking away with $200. Okay, so doesn't hacky sacking give you all the dopamine you need? Yeah, you know what? Hacky sacking is that is the only sport that I partake in. That was really funny. I don't know where that came from last time. Hey, do you hacky sack? All right, so Dubs, I appreciate that. There's a giveaway. Yes, there is. Shh, don't say anything about it. Okay. All right. I love your video. Got so much summarized on PA. Cool. Everyone, good morning. Okay, I see all my buddies are in here. Kilgore's in here. Ston came in. All right. So yeah, YouTube's been taking off the content recently. I understand, right? There's a lot of that's why we are trying to grow in the space, because we do think that there's a lot of sort of scam artists, snake oil type salesmen, YouTubers that are posing as market savants, and they've never been in a market, right? They see this as sort of another gold rush to take advantage of, and they have no experience whatsoever, and they have no skill whatsoever to really give to anybody else. So yeah, we're trying to clean that up. We're trying to provide non-sensational content that is very objective, right? Straight to the point, straight from the gut. That's a great book, by the way, Straight from the Gut by Jack Welch, the CEO of General Electric. It's actually one of the books that I was given in, I think in 9th grade. I read that book. Okay, so let's get it started. So first piece of news: Bitcoin's popularity rising with investors means gold will suffer. So this is I think this is inevitability, right? If that's a word, inevitability. I think this is ultimately inevitable. We see Bitcoin, we see gold as an important store of value. Tangible things, I think, will always have a place. It's one of the reasons why I absolutely love watches. Okay, I have a pretty decent watch collection. It's not that I have, I am just this person who always is partaking in conspicuous consumption and buying luxury goods. I just really like timepieces. And one of the reasons why I choose some of the timepieces that I wear is because they are stores of value. So if I do plunk down, if you see me wearing a watch that you go look up and is considerably expensive, just understand that I know that watch can be resold if push came to shove, and if times ever went south for the Clark household, I would have plenty of things that I could go ahead and turn over for cash, and they would have not declined in value. So I like to store my value in certain ways, and one of them happens to be in timepieces. It's not a considerable amount of my net worth, but obviously you're getting the point that I'm trying to make. Now, gold will always have a place, right? Gold will always have a place, but the same way that older things do continue to move on into the future, but they just take less of a priority. So I think that in terms of how things move, right, we see the sort of natural progression through time is that people gravitate towards the new technology, towards not only the new technology, but the superior technology. Now, there are cases in the past where the superior technology loses out to maybe the technology that is along the same lines, right? So moving in the same direction, but has more of an attractive, appeal to, through marketing or through advertising or just through capturing most of the market share of users. You've seen how technology has maybe somehow the best technology doesn't always mean it becomes the most popular company, right? The company that has I'm saying that wrong. The company that has the best technology doesn't always mean that it's going to be the company that sits at the top, right? There's a lot of things that go into whether or not someone is at the top of the totem pole. But we do see that over time, people have gone from, analog to digital, from corded phones to cordless phones, from, the big cell phone in the movie Wall Street on the beach, one of my favorite scenes, to the little cell phone, right? Things have progressed in a certain way, and we should look at, our stores of value as being under sort of the same, we should expect the same conditions to arise, or the same situation to arise, where you have something that is portable, that has more utility, that could store a lot more value, right? It's not just storing the value in terms of purchasing power or protecting against inflation, or, providing yield in a time where the dollar is declining. It's actually being able to store a substantial amount of value in a small space, right? So it's very efficient, okay? It's like a neutron star compared to gold. So, and look up a neutron star. The amount of matter that can fit into a teaspoon in terms of a neutron star, the amount of matter that's densely packed into that area, I don't know. It's like the weight of a million aircraft carriers. Don't quote me. But Bitcoin is, by all means, there are so many ways that it is a better store of value. But, okay, operative word in this case, but there will always be a place for gold, because God forbid, okay, or, just worse came to worse, okay. Is it worst comes to worst? Yeah, I think so. Okay, I said that, it didn't sound right for a second. So in the case that we had some sort of, let's say, post-apocalyptic dystopian society that arose, all right, where we're all going back to Mad Max situation. If you don't have the infrastructure, if you don't have the electricity, if you don't have the backbone that Bitcoin operates on, if you don't have point A to point B to make that connection, right, to transfer value. If you don't have a way to prove that there is value on your, let's say, your ledger, you're walking through a post-apocalyptic wasteland, and neutron stars. You're walking through a post-apocalyptic wasteland. That's a hard one to say. What are you going to buy? Your food and water with. Hey, I have this Ledger Nano. I swear there's a lot of Bitcoin on it. Nah, it's like, give me that piece of gold, give me that shiny thing on your belt, give me the buttons on your jacket. So things that are tangible can be melted down. These are things that have been stores of value since the beginning of time. So by all means, there is always going to be a place for gold. It's just that the gold to Bitcoin ratio, in terms, if we look at if we looked at the Bitcoin and gold as representing the store of value market, we should see that it begins to balance out a little bit more. That gold allocations begin to siphon to Bitcoin, I think, at an accelerating rate, and then it begins to sort of balance out over time. So Bitcoin rising in popularity means gold will suffer. Yes, because you're having people now, and you could think of, just for example, I've used this example before, and I don't think it's mine. I just can't, I'm going to paraphrase it, but someone else said it. If you are, a millennial, and you're inheriting your baby boomer parents' portfolio, and they pass on, the younger people are more inclined to go with the new technology. So when it comes to precious metals, and then we have Bitcoin, you're young, what are you likely going to go with? You're going to think out with the old and with the new. Okay, so I expect that this is going to persist for some time. And that's why I think we're in a new regime, right? So I think we're in a new regime, which is why, in the past, this might have been seen as maybe toppy media, right? Things that come out at the top, right? I think that we're into a new regime where finally we are getting to a state of maturity where now it is time, right? Where now we are going to see this positive secular growth over time, with this adoption that begins to trickle in from larger participants who didn't have the access, didn't have the knowledge, or the or even the belief that they now have currently, right? Or the confidence. Because again, the thing about someone like Paul Tudor Jones, the thing about Stanley Druckenmiller, I wouldn't say Michael Saylor so much. That's big, but the guy really smoked the Bitcoin crack pipe. He might have hit it a little too hard. These bigger players in the investment universe, right? Not people who are issuing debt to convert their treasuries into Bitcoin, like Michael Saylor. I'm talking about people that are investing and trading savants. Okay, they have by way of getting involved and acknowledging that this has a place, even Ray Dalio saying that it has a place now, JP Morgan, they have in a way said, you have permission, okay? We are putting ourselves out there. We are putting, whether we have actual skin in the game or we have, just how people perceive us, it's online because it's their reputation, right? They put their word in the same sentence now as saying, in some way that Bitcoin is validated. Now you have permission, okay? Now you don't have that career risk that you once had. This next article is going to get into the chart. Okay, so this is another CoinDesk article. Okay, first mover, why Wells Fargo won't be recommended to Bitcoin clients. Not really concerned with this. What the title says, there are going to be those that are still hesitant, that are reluctant to enter. But one thing they did say was, bubbles don't, fads like this, if it's a bubble, it's likely that it's not gonna persist, right? So this has been a really long time running now for Bitcoin to just be a fad. So in a way, they are acknowledging that it is something that is legitimate. The one thing in this that I think is important to touch on, and I just saw it stuck out, is that Lucas Wang, head of growth at the decentralized exchange Tokenlon, okay, has said that 80% increase in price over only 2 months might be a profit too tempting not to take. So this is one thing to consider, all right? And this is one of the benefits of, this is one of the reasons why we like to see price build a base. Because not only you have, all right, so you're a money manager, you're a fund manager, you're fast money, you don't have any kind of ridiculous red tape that you have to go through to get involved in Bitcoin. Let's say that you're a family office with a really liberal absolute return book and you get involved in Bitcoin. Towards year end, you're probably going to want to make sure that you realize these gains. And this has occurred from really the bulk of this move, or there's a very large leg, obviously, that occurred after the March crash. But this very large move with really no pullback whatsoever has occurred in for the most part, fourth quarter 2020. So this is very tempting to not take, to not capitalize on, right, or not cash in and realize these gains. If you're a hedge fund manager, a lot of this is actually just a charade, right? You want to make sure that you realize the gains in 2020 so that you could show this to your prospective clients in 2021 and 2022 to say, look, this is what we've done. You're also going to, if you're trading in the short term and you're not going to be holding on to these positions, you want to make sure that you take that tax money off of the table, right? You want to make sure that you pay yourself out of the market. So when you have big moves like this, the problem is that a lot of people are in the same position, right? So there's a lot of people that have captured this move, are in the same position. You didn't have these larger corrections between. So from, let's just say from the break, from peak to trough, back to peak again, which would be your peak drawdown, okay? You have a 62% gain from this previous high. So for all those that entered in on this break of market structure, there hasn't been a big change of hands since then, right? So this is something that's very hard to, for people to buy something and to hold it through gains, as you've seen trading DeFi, as you've seen trading alts, it's actually very difficult, right? It's very difficult to hold with the, to hold on the basis of belief versus to, look at your stash and look at your stack and say, wow, that's, you have to think how a more sophisticated investor, a more seasoned investor is also going to think. They're going to think, wow, okay, 65%. Let's just say we're using this as a reference point. Wow, 65%. The S&P since then has yielded. What are we looking at? We look at the ES going back to October from that peak. The ES has yielded in fourth quarter. We're looking at 5% from the peak upon the breakout, right upon the break of this high. Break of all-time high. What are we right now? Okay, 3.68. And Bitcoin, you're looking at this, if maybe you're a traditional investor and maybe you don't marry into the narrative, you're looking at this as an incredible absolute return, right? This has definitely exceeded any benchmark. Okay, so it's definitely put in terms of relative returns, it is, if you're, whatever your benchmark is, if you're allocating to BTC, I mean, the way that I look at crypto is I use Bitcoin more or less as the benchmark. But if you're looking at this in comparison to your traditional portfolio, hey, this is a higher beta asset. Wow, it's really yielded a lot. I really want to make sure that I lock in these gains. So without a lot of intermediate structures between here, we can't really say with a great degree of certainty that many people have done that, right? This structure speaks to one thing, which is ultimately that there's been a lot more buyers than there has been sellers, all right? And this can sustain over time, but this is just something to always consider, right? You always have to be wary or be aware of how the other player is playing. Okay, this is just very rudimentary game theory, and I hate to use the term game theory because it really glorifies basic decision-making processes in a market. All right. Okay, so let's look at let's look at the chart and make sure that I say hi. We got everybody. Not talking about walking through the ghetto, USA. Okay, give me that 556. Give me that 556. I don't want any of that 223 crap. All right. I'm bored for 556. I want 556. No 223. I can't find any Kilgore. I can't find any 556. I live in New York. I went to the range not too long ago. I stopped at the local gun shop on the way there, and I immediately knew. I'm walking in. I turn the aisle, and there's just there's a completely empty aisle, and I'm like, you guys didn't get any 556 yet? It's got a piece of paper on it, and they're like, no, we have 4 million coming in at the end of the month, but we don't know. Those might be gone really quickly. I'm like, what? So I'm stacking mine. I don't, you don't want to give. It's like a weird, you don't want to give up your ammo. Okay. All right. Food and ammunition first. Crypto coffee and watches. Okay. New to channel. Came from Cred. Great stream. Cool, Sheltered Corgi. Happy to have you here. Cred is one of the only other streams that I really always try to tune into. Not only does Cred have a way with words, Cred is he's very good at communicating ideas in a very clear and concise manner. And even from someone who's been trading now for 14 years, and Cred is a young guy, and I really admire him as a brilliant young guy. And he's just a brilliant guy. You don't have to say young guy, but you have to understand that I didn't realize how young Cred was until not too long ago. I think Cred is 22 or 23. His birthday might have passed recently. But he is just, he's an old soul. He's definitely ahead of his time. And he is someone that I could say with a great degree of confidence that if you're subscribed to this stream, you should be subscribed to his. And if you watch this stream, you should be watching every one of his, because I think a lot of the things that we go over are, they're best supplemented by someone who has, or, they're best supplemented by a degree of knowledge with regard to, you want to be very good when it comes to the area of price action trading. And while I have, been trading for 14 years now, I think that when you spend most of your time teaching one thing, you just become better at teaching it, right? So I can look at a chart and immediately say, okay, no, I don't like that setup. Like, I could tell based on the activity that's occurring, the level of springiness and the response we're seeing at support. But some people, okay, there's something to be said for teaching a subject, right, and being very adept at that. So some people, they possess a certain eloquence or ability to consistently teach that idea, whereas I am maybe more proficient in teaching order flow and market profile because it's just my area that I spend most of the time in, right? I don't really spend a lot of time trying to teach price action. So I think that they really complement each other. You have to have a foundation in price action. You have to have a foundation in price action, I think, to trade successfully no matter what. I think you want to work off of that. So you want to have a foundation in price action, okay? And then market profile, so you can organize everything, and then you sort of refine with things like order flow, right? So I think that is a phenomenal way to approach the market. So 10 plus IQ for Cred. So yes, all right. So let's look at the chart. So look at local levels. We're gonna go to BTC USD Coinbase. So here's where we're at right now. So yesterday I got into a short a little prematurely. So I got into a short. Excuse me, not a short. I was short from the night before. Okay, so I was short from I think 18.9. I got out at I think around. I was 18.95. I got out maybe in 18.7. As all things with shorts, I don't want to hold on to a short in this market. Absolutely willing to take shorts where we currently sit within market structure, the way that we are sitting, considering that we have a very clear area of resistance. Multiple times in the past, long trends, if you look at a really long trend, right, where it's very one-sided, a high degree of conviction by buyers, this long-ass trend, in my mind, it inspires the idea of a long range, right? Because the market actually spends a majority of the time ranging. So if you have a really long trend, you have to imagine that we're going to have a good degree of, we're going to spend a good degree of time or a good amount of time sorting this out after that, right? You don't want the market to continue to move up in a parabolic fashion. That's not healthy. You always want to build a base at some point before you start to establish new ground. So if we look at previous trends, right, if we look at the previous legs of trends, there have been really long consolidations, okay? This one from, if you go from essentially the peak to the break, this one peak to the break again, there, you know, and I start from the range, what I consider the range high. So I'm not talking actually peak drawdown, which would be from high to, you know, from peak to draw back to peak, you know, through peak again. If you go from the beginning of the range, okay, to the break of that range, so I say this, so then you retest the previous area of this range. So excuse me, let me be a little bit more eloquent. Previous area doesn't really help everybody. So from peak to bottom to break again, and then not peak over here, it's just the beginning of what I considered the range. Okay, back to the retest of the prior range to break again. These are almost the same, you know, roughly the same amount of time has passed. So you're looking at around, I think it was like 80 days. So let's just make sure that I'm not pulling that out of my ass. Okay, so to break 80 bars, and then from the first day of what I consider the range to 80 bars. Okay, so it's roughly the same. Now, remember, all right, I'm saying things like for what I consider, okay, and then for this one, I'm saying it's the peak. Don't get lost in the fact that these perfectly match up according to what I say. What I'm pointing out is it took roughly the same amount of time. You know, of course, when you're putting up your own indicator, when you're trying to show the, you know, a certain level of accuracy, it's almost like I'm naturally going to go to look for the same level of accuracy to pull up. But the point is, you could see that clearly these took relatively the same amount of time, right? And I only want to say that as a disclaimer because I saw someone post something this morning that they said, oh, look, the trend line was important. And it was after price action had resolved and made a new point on a trend line that up until that point wasn't established. So, of course, you have to have certain things occur to create the trend line and to say that it's been much more important. All right, you can't create a trend line until you've had a reasonable amount of touches in an area. So it's very easy to look back at a structure and sort of backfit, you know, a narrative and backfit criteria to say, oh, look, you know, voila, this is how it worked out. You know, it was perfect. So this is roughly the same amount of time for it to resolve, right? And the point being is that the trending moves that led to this, okay, with the exception of this one being off of a significant structural low, although I would say that what I'm paying attention to more so is the fact that this was the correction into the underside of this previous structure. This is your big, you know, trending leg breakout that's followed by a much longer consolidation, big trending leg impulse breakout, followed by a longer consolidation. I think that it's very reasonable to say, I think I'm communicating this in a way that I don't have to say it much more. This is going to, you know, from the first day, from here, if you look back at my Twitter, once we started having value overlap, and we're going to get to that in a second, I started to say, okay, anticipate the range, right? Trending conditions might be over for a little while. You have a lot of value overlap, right? You didn't have value migration upward anymore. Value had been sort of being reestablished, and value, while throughout the impulsive structure, had been redetermined over time higher. What you're looking at when you're looking at value overlap is buyers beginning to, you know, to battle in a given area more consistently, right? Buyers are not able to raise the prices. Sellers are not able to create, you know, a new trend to the downside. So we're constantly looking for, one thing that I should always say is that one thing that I am always looking for, and that we're trying to look for in the things that we teach at BlockRoots, is where is value developing, right? So in a trend, value is consistently rising over time, right? In an upward trend, in a downward trend, it's the opposite. So in a, you know, when something is in demand, the price is going to go up. When we're in more of a stalemate and we found maybe some sort of temporary fair value, where is value developing? It's going to develop in a given window rather than being, you know, redecided over higher prices or redecided at higher prices. So that is where we're currently sitting right now. We have a ton of value overlap, but I think that this could take a long time, right? And you should sort of set yourself up for maybe that this is the range we're going to operate within. Now, in terms of immediate levels, always have your daily levels on. So your daily and weekly levels, I always say, hey, I look at my levels based on market profile, and I always take into consideration daily and weekly levels, even 4-hour levels as well. Now I weigh them obviously in terms of priority, okay, where I'll look at a daily level and maybe say that might be more significant than, a lower time frame level, but that all adds up, right? It's all a smaller data set within a larger data set. Okay, so the areas where the market came into violently and then left violently, that's telling me one thing, whether it's on the, whether we see it on the 30-minute time frame or we see it on the daily time frame. Okay, if the daily closes out, obviously it carries more weight, but if you see a response in an area, it's saying it's showing you the price is rejected from that area. So I always need to know where the daily levels are. So we have a weekly level, the most recent weekly high at 19,375. So why is that important? Well, because this is going to be a lot of what higher time frame traders make decisions based upon. Okay, so once this changes on the higher time frame, so it's not a 30-minute candle above this level, but if we get a significant daily close to that level, hey, maybe the trend is going to continue upward. But this has been the more recent turning point on the weekly. Okay, this is the highest weekly close, or rather up here, but this is the more recent weekly level. So I always want to keep that level in mind, because you're going to see that people act based on that level, either being returned to or retested if we break it, and it's just a higher time frame level where you see an increase in participation. So daily levels right now, we're between, and we are right at, you could see we're below this daily level at 18,658. Right, so just think 1865, it's an area, it's not, a precise point. So we have that level, and then where we're looking at currently right now, this is, I have to point this out before we go back down, because I did label it, but it wasn't, okay, sorry. So it was being hidden by it was hidden based on the BTC ticker. So if we're on the daily right now, this level right here is the weekly cluster low, all right, that was actually a weekly open too. So one of the things on the Clark indicator, as you notice, is a weekly open. So this is important because, if you're retaking your weekly opens in the opposite direction, it's just telling you that you are beginning to lose the trend, right? It's a matter of progression, advance versus decline, okay, and retreat. So, all right, this was the first area of support after breaking this daily low, right? So this was a significant support. If we're able to maintain this, okay, at least it's showing us that on the high time frame we're maintaining weekly opens, right? We haven't had that much of a serious decline, okay? What we had was a ton of activity that was trapped at the highs, right? We saw that for the course of this structure that we had a ton of long activity on futures. It wasn't exactly supported by spot market, right? And in this case, towards the end of this structure, you're actually seeing that is beginning to shift. And you could also see right here that the funding is actually negative for the most part. And, well, it's negative, it's neutral, but we don't have any kind of really significant positive funding left. So this is, matters of context, matters of positioning. This is a matter of positioning. This is telling me that now, and for the first time yesterday, it started to really show. Now we were at a point last night, yesterday, where everyone was really getting on board with, okay, yeah, we're coming down here. I didn't see really many positive people, many positive accounts that I know of, and that's not the sample you go off of, but it's the kind of feel that you want to pick up on if you're looking for that buy the blood opportunity. So these are the daily and the weekly levels, all right? The area that I would say is significant right now that you absolutely want to get back above is this daily level, right? I don't want to take any longer swings unless we're back above the daily level. So I closed out the swing that I ended up scaling into further down here because, ultimately this 18.65, 18.6, right? This little pocket right here, that is resistance, right? We've lost that. We've broken that market structure. Now, many times we've seen that we've nuked this before, where we break through this level, we trap a bunch of short activity, and then this is the first level that looks to get sold, and we see this nuke through. Now, it's one thing to say, okay, it's one thing to say, that this is bearish, all right, but it's another thing to say that we've seen this before, okay, but it's a poor idea to say that, all right, this is going to get nuked this time. Right, so I still have to operate regardless of, I guess I should have qualified this by saying I'm not bearish on the higher time frame yet. right? So I'm not bearish. I still think that there are great long opportunities setting up. Do I think, though, that would be a prudent decision for me to, or would I be an intelligent trader if I was to say that I'm going to take this trade that I ended up scaling further in from my initial entry and just extrapolate and take this as, take this level for granted? Because ultimately that's what I think. I think if you reclaim 18,658 and you find support back into this range, I'm just looking for a previous, range play, right? Value had been distributed here previously. It's an area of high liquidity. You would just expect that you would fall back into sort of this mean reverting process back within a prior range. Okay, where you've been accepted before, you'll be gladly welcomed again. If you get accepted, though, right? So we get to party in here again if you make it through the door. Okay, I don't want to take the door for granted, though. I don't want to say, oh, we've seen it before where everyone expects this is a good sell, and now we're going to nuke through it because of that. So on that note, this 18,658 level, I'm actually not interested in shorting it. So I guess I have to also say that. So, it's all sort of implying that I'm not interested in shorting it. That doesn't mean I'm interested in holding a long through it, though. Okay, I'm not taking the level for granted. I'd rather play level to level with my lower time frame trades, right? Higher time frame trades, yes, I think you get more of and just from where we currently sit right now, right? I think you are developing something that could very well begin to be a bottom above this previous structure, right? So this is the next major area of support down here, this daily level around, and it's not that major either, right? It's a prior daily swing low. You got a ton of activity that took place below there. You certainly don't want to see that you gain acceptance below this 17,153 level. So if you start gaining acceptance into a prior area that has rejected us, right? So the market, what are the wicks telling us, right? Well, one, it's a daily wick, so you could see a ton of activity took place down there. There was a substantial amount of structure. So I would say this should act like support because it's, most of this structure was built sideways. It's not like this vertical structure that normally gets nuked, right? So when you have a structure that's built like this, okay, traders had it easy. Drag your stop up. Okay, so this typically leads to a cascade if you gain acceptance through it. It's not a gap like this, but it certainly is not a firm area of resistance. You would expect price to speed up through there rather than slow down. But right down here, I would expect price to slow down. If you start gaining acceptance into this level, so we start spending a good amount of time below, 17.1, 17.15, then I would say, yeah, expect 16, right? Because you don't want to see, when you're looking at price, and if you're looking at a TPO chart, it's the same kind of idea. Okay, so look at this low right now. This low tells me that price came into the level violently. So yesterday I shared a chart, and it was the TPO was built like this. So I said the low's not in yet. Okay, if the low is in yet, and it's based on something that maybe I'm not picking up on, I don't care because that low is probably going to get swept. This is saying when the TPO is like this that we were able to hover in an area for a long period of time and buyers didn't reject us immediately. So if you drop something in value, right? If you drop the price of something and it is still very valuable, ultimately, what should you see by buyers, right? You should see them jump in that auction opportunity. If I have an auction at Christie's auction, I'm selling a Jackson Pollock and it's a $20 million painting, and I say, okay, I'm asking $20. You wouldn't even be able to get a word out. That it would be bid up so fast. Okay, so when the market comes into an area and leaves a profile that looks like shit, okay, so if we're looking at this profile right now, what part of this doesn't look good? It's actually the high. Right, so the high is kind of blunt. The profile is built like this. Well, yesterday the profile so far into the day was built like that. So what this is waiting for is a cleanup, right? So it's like a stop hunt, right? You would expect that you're consolidating here. It almost occurs the way that an under over occurs, right? So you have a consolidation into a low, looks good, and then bang, you get a rip into the low. You take out the stops, and then you start to build a profile that looks more like that. So this profile, the same way wicks work, or it's not the same way wicks work, because the problem with wicks is you don't know exactly. If you look at a daily wick, it's like, oh, a wick, that's not substantial. And then you look down on the 4-hour chart and you're like, holy shit, you spent a lot of time there. You just got out of there, right? Depending on where the day opened and where the day closed, you got out of there in that amount of time to leave the wick looking, like it's something that's fragile and that not a lot of stuff. Wow, really articulate. That not a lot took place there. This is a chart that shows you how much time you were in an area, right? So when you're thin like this, it says, nope, didn't have a lot of time, right? There was not a lot of time for buyers to take advantage of that opportunity. So it shows demand, right? Shows demand, and if you have a good amount of volume down here, that's even better because it might be excess at the low, single print, but you don't really have excess in the volume profile. So maybe there was a good amount of trap selling that took place down here. Okay, market left there really quickly, and you have that trappy setup. Either way, you want to see this. Market came into the low and was rejected quickly. So we have, one of the first signs that you could use to say, hey, maybe the bottom is developing. It doesn't mean that this is going to leave like that. You could get multiple periods where you come in and put these poor low, you put in these buying tails at the low where you have that excess. So I just want to see that absolutely. And that could take place above this low. So markets do, they don't repeat, but they do tend to rhyme, and behavior over time, it tends to repeat, and humans haven't changed much. So fractals do sort of play out a lot of the times, right? Not enough for you can't blindly take a pattern, right? You can't blindly say, okay, this is going to absolutely transpire the same way things did prior, right? Where, all right, you did have a structure that, it did have a big nuke, right? Big sell-off, and then it continued to move up, and here we are now, so why the hell wouldn't I just buy this dip and expect this to continue? No, I would say more, if anything, when you have a structure that has maintained its prior low, right? You could keep your confidence, you could keep your composure, but I don't think that you just say that that's actionable in and of itself. So I'm looking at this right now and I'm thinking, all right, judging based on historical points, could we say that it would be reasonable to expect that maybe a bottom could develop above the low and we don't have to come and test this low, and that this doesn't have to be a really long range where we have multiple equal highs and equal lows? No, it doesn't have to be. And if you take context into consideration, I don't want to say take it into consideration to be blind to what might occur, right? Or to be blind that it might change to a degree, because it is right now, right? You have a little bit more of a, towards this high, you have a bit of a different scenario than prior highs. So you so far have taken out the prior highs to some degree, okay? But in this one, you have more of a roll, right? It's more of a roll. I mean, this was a poke above the high, but it was I think it's a little bit different structure-wise than previous structures. But could you say that because context is the way it is, or rather in this context, that it still goes on to develop sort of the same rising range that plays out? Yeah, you definitely could, right? It wouldn't be out of the question to expect that, hey, maybe we might find support over here. I mean, last night, one of my arguments for being pretty confident in picking up along over here, which I did get out a little bit earlier than maybe where I would have gotten in if the market turned, right? If I didn't fill myself even lower, is that 4-hour breaks, for one, in this entire structure, you haven't had many interruptions on the 4-hour chart on the legs up, right? So just like 4-hour, no interruption really in 4-hour lows. This has been like I mean, how do I put it? It's been like a paradise for utopia for trailing stops, right? So when we have had within prior consolidations 4-hour breaks, so you have a 4-hour break, let's just say this 4-hour low, all right, 4-hour break. This one was very violent, ended up moving back down to prior structure, consolidation, 4-hour break. There's actually been more times where this hasn't occurred, where you've had a very big follow through. If you've had a significant stall under the last 4-hour break, it's been more often than not that if the structure, so we had a rising structure, you finally lose 4-hour structure, you lose previous 4-hour structure, okay? So the first initial loss, whether we're looking off of this one, okay, or this one, either way, we don't expect the market to just puke all the way down from that. We've seen in the past that, based small sample size of this entire trend going back to March, where you began to consolidate. So that's one thing that we have to say, right? So after you began to consolidate, the first puke of a 4-hour low, if you found a good buying response, it is more often than not led to some sort of local bottom or intermediate bottom, right? And when I say local or intermediate, I mean in the short term, there's been mean reversion rather than very, if the continuation hasn't resolved immediately, then expect that you're going to get some relief, right? And what we've seen, getting the hiccups now, not the hiccups, but damn, I'm empty too. What we've seen is that shorts have not been rewarded, right? shorts haven't been rewarded and paid quickly. Well, excuse me. Shorts get paid quickly. So in markets, shorts get paid quickly because markets, grind upward and they crash down. So when you capture a short, it's not that, the market usually grinds down and you're in your short. It moves quickly. The benefit of a short is a lot of times they occur on liquidations, right? You're taking advantage of that liquidation cascade. Now, liquidation cascades work in futures as well to the upside because, again, it's your fear to the upside, fear to the downside. There's a long for every short. It's not the same as the way that markets are skewed in equity markets, for example, where there is that grind up, crash down. There's not many crashes upward in equity indices, for example. Whereas you'll have crashes upward in crude oil, you have crashes upward in gold, crashes upward in anything that's a futures product, right? Or commodity futures, whatever, equity indice futures. So what we see right now is that it's stalling, right? And the thing about shorts in this environment is they haven't really been rewarded with much continuation without coming back to the level. So someone said, well, yeah, but what about, 19, this high up here, that's been rewarded because look, if you shorted that, you're down here now. No, things don't work like that, buddy. Like in theory, yes, if you caught the top, in theory, if you caught the top and then you sold at the bottom, you shorted from the top to the bottom, right? But when you are in the position, what I'm saying is you haven't been rewarded much, right? You say you shorted this, perfect top. Price came back to you, okay? If you're shorting this top, where is your next reasonable target? If you're shorting this top after seeing that you just put in this this grinding structure, I'd say the next reasonable target would have been, down here. Right, you're looking your high hopes of down here, okay? You're looking maybe down here, all right? Price comes into this level, and you're thinking, I'm going to compound my short. Oh, sorry, screw you. We're coming back up to your entry point. You got to rethink this one 2 or 3 times, buddy. So that's the way that it's worked, right? You haven't had many shorts that haven't. So you have a structural pattern like this. A lot of the shorts that I look to take are backside shorts. They haven't been rewarded. So you get a structure at the high. You get a test above, breakdown. You look to take advantage of the retest, right? It's the same sort of thing as an under over like this. Bloop, right? Okay, so you're looking to take advantage of this in this market. You're not getting it favorably. A lot of the time you're getting something like this, okay, which might break down, all right? And maybe you catch the breakout short. Maybe you're someone who caught the high, but guess what? Price is coming all the way back up here. Pretty impulsively, going to make you second guess. So you haven't seen that many shorts have been, rewarded with something like this. So you have a consolidation. These are terrible drawings, right? Consolidation, slip, and then you get some hyper, really fast-moving trend to the downside. The way that you've had the slippery moves to the upside. So that hasn't been the case. So one of the things that you have to do as a trader is, hey, what have been norms more recently? What has been sort of the status quo in the last few months? Have we seen that we've, this is like the same reason why you buy dips. Oh, we're in a bull market. Go figure, buy dips. Okay, we're in a bull market. Go figure. Don't look to short every high, right? So in a bull market, shorts are not being rewarded because it's not the market regime to wear shorts, to reward shorts, right? The trend has been up, right? So my bias has always been, consider the short-term shorts from one level to the next, close it out at the level, right? Don't extrapolate and think, maybe I caught this ridiculous short. You're not catching, if you're like me, your shorts right now are not increasing your P&L really, because your shorts, from my exposure, are a part of my spot exposure. So I'm never exceeding my overall portfolio value with a short. I'm never putting more at risk with a short. It's for the most part a trade that is a hedge on my overall spot exposure. So, it's nice to dampen some of the downside, but I'm never really gaining that much, right? I'm not thinking, and for short, it's unless you're taking increased exposure beyond what your actual capital is, you're what? You gain as much, you could gain 100%, right? If you short it all the way to the bottom, okay? So it's just not that attractive. From a convexity standpoint, shorts are attractive in perpetual swaps because as, if a perpetual swap goes against you, then, your margin is going up as well, right? So if you're in a short and the position is moving against you, your initial margin used to open the position is, going up as well. So a shorts profile for the the profit and loss profile is, if this is the price axis, let's say that, this is where you're short right here. If price moves down, okay, it speeds up. If price moves up, it slows down, right? Because your BTC, so this is just the profile of convexity for a short position. If price moves up, it slows down, right? It's more logarithmic. And if price moves down, it accelerates. And if for long, it's the opposite, right? For long, you bear the brunt of that negative convexity, because if your long position goes against you, your margin drops fast, your position drops fast as well, right? So long your longs is great until it's not great, right? Until you take the wrong long. So let's look at the chart more locally, and we'll take a look at some of the levels that I'm interested in. Okay, so here's our more recent profiles, and this is what I'm talking about. Why did I say back here? Okay, so when you are, for those that are on BlockRoots and we do the live streams, whenever I talk on the live streams, there's a different tone than when I'm on Twitter, kind of shooting the shit and having fun, right? Of course I'm bullish, but I am not absent-minded with regard to what's going on. Okay, so I'm rah-rah bullish, but I am not buying the top. Okay, so back here, you could find my tweets and some posts that I was saying where I was saying, okay, we're starting to have value overlap. So value migration in a trend. So value being redetermined at higher prices. The value raising over time. So where 70% of the activity and volume is taking place. And then we start to have value overlap, where value is, if it's not beginning to decline, it's actually beginning to be these inside day values. So it's just showing, all right, now value is accruing to this one given area rather than moving up over time or down over time. So where's value developing? All right, so the beginning threshold for value developing, you would look for the initial days where you put in the high and the low. And you'd expect that it has to develop somewhere between there, especially when you have this rate of dispersion, because if this is your high, you're not going to have, if you're going to have overlap, it's going to take place between somewhere, between point A and point B, rather the high and low initially, because in a trending day, you're not going to give too much weight to the value area. So as we begin to move sideways, we get more clear idea where value is developing. So the low of this value, the high of this value, the low, and all I'm doing is pointing out how over time it's been channeling, right? Now, when you have a trending structure, you get value overlap, you get compression. So over time, you'll see from a left to right translation, you look at something like ATR, you look at something like your average subperiod rotation size, which is your average 30-minute candle value, right? So if you're looking at the 30-minute candles throughout the day, all right? So, how many 30-minute candles throughout the day, right? 24 hours in a day, 2 30-minute candles in an hour, do the math. So the average rotation size declines. So it's just showing compression. You're seeing the profiles compress. But the value area for the entirety of this structure, if we just combine this, so we're going to combine it, and we are going to combine it, and we are going to combine it. All right, there we go. I think so I'm getting used to XO now. All right, so we are 1, 2, 3, 4, 5. Go 5, leave we'll go 6. The trending day is kind of the last day, is part of the high. So what we're seeing is that this is our distribution for the last since November 30th, right? It's pretty balanced, right? Individual profiles within here are not going to be balanced, but a consolidation and a range over time is more likely going to be balanced. It's a consolidation, a ranging price behavior is by definition, it's a lack of imbalance, right? It's price being sort of stuck in a little pocket, right? It's in a channel. Okay, if you were looking at this, not topographically, but from the side, it'd be like this is the high and the each of these are the highs, and where the ball sort of rolling between the channel. Now, what do you need to get the ball to roll outside the channel? You need a force to act that's greater than the force required to maintain the ball in the channel. So we're stuck in this little gravitational well. Just having fun. So here is the value area high. So you're looking at right around 9,450. Okay, so I'm more inclined to pay attention to the volume value area. So this is where you spent the most amount of time, but the volume is where most of the participation occurred. So I said 9,450. I'm likely looking at that with some level of price action as well, but just to give you an idea, it's never an exact line, right? So it's 9,470 here. The value area low, okay, 18,900. So as you might remember, I said the other night, my triggers are 19,450 and 18,900. So 18,900 trigger for the short. Okay, I took the short initially. I didn't close it out. I didn't get out perfectly. I slept on the position and I ended up closing it out when I woke up at 5 o'clock in the morning after watching it for a little bit. So I should have had a limit. I should have had a limit slightly front running what my target was, which was 18.5. So absent-minded, should have had a limit slightly front running the way that I like to in bullish market environments because, hey, I got to assume everyone wants to buy the dip before everyone else. If everyone's acting on behalf of everyone else, that level is going to be front ran, right? Same way that patterns get smoothed out, same way that people adapt to other people's decisions. So that 18.9 level is significant, that 19.45 level is significant, so that 18.9 level is significant right now as well. So this TPO is the last trending day, and one thing that you see through the 18.9 level is the increase in participation, right? So it's just, hey, how do you identify acceptance? Well, you get activity through the level. So instead of coming down over time consistently to the 18.9 level and then saying, nope, getting out of here really fast, price was able to spend more and more time down here. So that level to me is really important. I suppose that in terms of local structure, you might be able to justify a long developing. You know, I'd say I would probably be more inclined to take profit before this 18.9 level. So again, the level that I said was 8, that level was important back here, but I think that the daily level is going to carry a decent amount of weight because again, you have people that are not trading on behalf of this that are placing their walls, that are placing their limit sells at the daily level. So, you know, I'm giving a certain amount of weight to that 18.65 level. And there's also a good amount of confluence between that and where the high volume node was within this trending day to break that level. So things to pay attention to. This little single print zone. So 18.6, that is where that imbalance ends, right? So the imbalance right here. A lot of the times you'll see that if we have a double distribution or a structure that even looks like this, so double distribution is like this. This imbalance area, if you're in the pocket down here, if you try to revisit this, this should initially act as resistance, right? It's an imbalanced area. It's an anomaly. Anomaly, right? So, because it's not balanced, right? So this is a balanced profile, a normal Gaussian distribution. This is not. So if you gain acceptance into this, you're likely going to cover this inefficiency. All right, so now we've used 3 different words to describe what ultimately I should have called an inefficiency. So it's imbalanced because the market moved imbalanced through this level. The profile is anomalous, right, because it is not a smooth distribution, and it's an inefficiency because there was no activity that really took place here. So we tied that all in. If you gain acceptance into this pocket, so from 18.4, you should traverse 18.4 to 18.6. So if we look at this on the lower time frames, you could see yesterday's value area low right here. Okay, here's this little single print pocket. Okay, and right now we came into this level and we've been rejected, but I think that we're starting to show signs of strength. You're back above, you're above today's VWAP. Here's yesterday's VWAP, right, which lines up around the low of that prior value area low. So I don't want to extrapolate too much, right? So 18.6, short-term trade from 18.4 to 18.6. I think that that's on the table. And then from there, you know, it's a matter of how confident are you, right? This structure on the way down is starting to show signs of delta divergence. So you have into the lows right here, you had an increase in this activity before the low was even broken. You have a ton of aggressiveness into this low. This right here, this move up in delta and move down in OI, you could suspect a good amount of that is actually shorts covering, right? So price is being helped by shorts covering. Now what you want to see is that the spot bid comes back into the market. I think that you're starting to get that. So if you look at this on the low time frame, just look at the premium index, for example. This is showing you that spot is trading at a premium. So spot is coming back in. This is good. Don't forget we're likely in a different market regime, right? There's likely a lot of people that are looking to buy this dip that are first-time Bitcoiners and they're buying, you know, $80 worth of Bitcoin right now. So you have new participants in the market. You have to imagine you have new people defending levels. You have new people acting, you know, at arbitrary levels even. So there's all these things to take into consideration when you consider what kind of context we're currently sitting in, or what the current context is rather. So short-term levels, right? This 18.4 level, you can see this is where, here is the little single print zone, right? This is the pocket. Now, if you gain acceptance, again, going back to what I said earlier, if we gain acceptance into this level, in this kind of environment, how unlikely is it that we could just nuke through here? Yes, we absolutely could, right? But I don't want to act on that. The way that things currently are, you have a break in daily market structure. You do have a lot of things that are shaping up to say, hey, this is the first time that the market got really overheated. This is, a market that has moved considerably. It is expected that we move in a range. So I just don't want to take levels for granted. The only way that I could really, let's say, start getting very bullish is if we start to, upon breaking above 16.58, right, upon that daily level, and then you have this little flip that occurred at that value area low. So if we're starting to really gain acceptance into this point, then yes, all right, then you could say, hey, there's a high probability at this point that if we're back up here chilling, all right, that anyone shorting here is, I don't know, not the greatest idea, right? You have the highs up here that coincide with that value area low. You're just showing the market how much resolve Bitcoin has consistently. You have the spot lead. At this point, you break above 18.8, 18.9, and I just would think that you're back into the range, right? You'll fall back into ranging behavior in this micro range. And then maybe, this resolves faster than previous consolidations, but you do have to kind of take it one step at a time. So let me look at some of the stuff in the chat. All right. Oh, I thought it said John Walhoff. I thought for a second it said Wim Hof in my chat. Expecting a retest of 81. So as the market's moving up, what signs would we want to look for to say, hey, maybe this is getting a little overheated now? One of the things you would want to look for is, are we showing signs of absorption at this high? And to be honest, one thing that I'm going to point out right away is, let me open this up. See, I'm getting better at this, but I really, Sierra is I have a soft spot. Let's see, shit. All right, so we're going to expand this. Are we going to expand it today? All right, so there we go. So one thing to point out, again, where is the market being accepted? Where is it being rejected? So prior inefficiency, this little pocket, not much activity. We were rejected at the low so far. That's what we know. In terms of local structure, we do have a rejection down there. You have a good tail. And what you don't have at the high is a rejection at the high yet. So we haven't found that seller that'll stand out and say, no, we're defending resistance still. So we haven't met the seller yet. And that's what you're doing. You're seeking liquidity, right? You're seeking you're seeking the other side of the book, and you haven't found it yet. So I think that this is why, one of the reasons why market profile is, useful is that, yeah, you could leave a poor high like this behind just through a loss of momentum. But after putting in this move, right, after breaking structure, and we've seen how mean reversion has worked in the past, if you leave a poor high like this, I'm just going to bet that, let's just say we don't leave it behind without cleaning it up. And if we clean it up, it just means that we're coming back above 18.6 once more, right, or 18.5 once more. So the further we move up, right, that just, in my mind, that inspires ideas of us just breaking back up, right? And I'm confident, I'm still confident. So upon cleaning up this high, if we're not rejected at this daily level, and you start to see that we're cleaning up the high, and then if you're back above this daily level, I wouldn't be selling it if you're back above here, right? That's the daily level and that 4-hour low. So you have a good amount of confluence, enough for other people too to say, oh, yeah, you know what this is? What happened? This is, something like this, right? We're coming back up to clean up highs. Or if we go back to maybe even better example, this period back here. So sort of similar, right? Big leg up, consolidation rolls. And, this came, maybe this sort of looks like where we are right now with this structure. But still, maybe you don't exactly test out the extreme of that low. And then ultimately, yeah, we do clean up the highs again. So patterns have sort of repeated in similar fashion. Is this one, considering how bullish the context currently is this one going to do this and then this? Or is it going to, because of how bullish things are, just do that? I wouldn't write that off, but I also wouldn't blindly assume that one is going to occur and hold on to a position because of that. All right, so SPY dumping. What are we down on the day? Yeah, what are we down for the day after the high? 92 basis points, just under a percent. I wouldn't say that. I'm not really concerned with the SPY right now, honestly. Breaking all is, reminds me of the SPY and any other given day is just new all-time high every week. Going into the end of December, you have triple witching, or I think it might be quadruple witching this year, but we can expect volatility if you assume that people are going to be selling to realize gains, whether those are funds, asset managers, whether those individual investors. Yeah, maybe this year it's even bigger though, right? Maybe this year, because of the Robinhood push that actually carried a lot of the market, maybe we see more of what retail would do, which would be, wrap that up, close those positions out. I'm not really expecting too much to change with the S&P. So, and what is Bitcoin's response? Muted. No real response anymore to the S&P. Dollar moving up. What's Bitcoin's response? Let's look at the dollar with BTC actually on the low time frame. So, I mean, this is not the best chart because percentage, and you're not looking at the dollar doing anything ridiculous in percentage terms often. So let's put on a side-by-side chart. So what do you have right now if we're just looking at the structure together? Is the dollar and Bitcoin, are they moving together or something? There's it's not, I would say that right now it's very loose correlation. Or at least, put it this way, at least the movements that have occurred with the dollar to the upside, they haven't really been detrimental to BTC, as we've seen in the past where a move like this in the course of the last few hours in the past has left Bitcoin looking a lot more troublesome than it currently is right now, or it's rather at least had a more immediate effect. But I think that this was when the market was more driven by these trader-driven correlations, right? So gold. So the thing about gold is you would want to see that this level get maintained as support if you're going to be bullish with gold in the short term. But as I said with gold, gold's a macro instrument. Don't expect gold to go down to 1300 again. Expect that gold, similar to consolidations prior of previous breaks of all-time highs, has spent a really long time sorting itself out. It's not a super reflexive asset like BTC. It's definitely a lot bigger than BTC. It definitely requires a lot more to move it. So I'd expect that over the next, maybe you could even say 6 months to a year, that gold spends most of its time within these levels, right? But develops a base before moving further upward from this local area. So I'm not, for those that are saying that this is a swing failure, like some shitcoin, all the way back down to a major range that it was in for 5 years, I don't think that that's the right way to approach it. Just look at gold and don't be maybe so driven to assume that it's going to be exciting like Bitcoin and continue to just bounce off of levels and put in ridiculous moves. All right. No, Pablo, I don't really take hash ribbons into consideration. I don't, it's not that I don't take it into consideration. Hash ribbon is sort of like the little bit of sugar on top, right? It's like if I, put it this way. If I'm looking for a long setup, if I have the conditions that are ripe for my particular system, depending on what system I'm employing, whether I'm swing trading, whether I'm trading on the lower time frames, those things don't require much outside of what I've already established. They only get, it's only a positive catalyst if we have these other sort of confirming factors to substantiate, my idea, right? It only makes me feel more confident. I don't think I've ever put it this way. I think that a lot of things have to determine, for me, my confidence always plays a role in how I'm positioning myself. Very confident setup, all the boxes checked, sizing in. You know, 3/4 of the boxes checked, a hit rate, a setup that has a hit rate of 50% instead of 70%, not as, not swinging as hard as I might if I had the alternative to that, which is the higher hit rate, the more confident setup. So there hasn't been a time, with that in mind, there hasn't been a time where I have had a setup and I've seen the hash ribbon, which has been something infrequent, right? This is not something that changes frequently. There hasn't been a time where I've seen that and gone, oh, let me size up for this trade because the hash ribbon has sort of, switched to, has put in a bullish signal. What I will say is it just drives confidence in maybe spot positioning or, the confidence you need to have as an investor. I don't pay too much attention to it. Using Sierra is like using a brick for a mouse. Yeah, Sierra is like, yeah, I don't know, it's like I have a soft spot for it. I need to keep Sierra now, and I don't mean I need to keep it. Like, I like Sierra, but, like everything, why are we more confident in BTC than we are in gold? Well, we are because it's technologically it's superior. It's superior on a few different fronts. And for me, I'm kind of a gear whore, so I like the new gear. I like to tinker with the things that really make my life easier, that work better. So if I find something that works better, no hard feelings, Sierra, but it's not it's not personal. It's business. I haven't found the perfect alternative Sierra, which I think XO probably will be. They're just not there yet because I like the desktop platform. I like that Sierra offers the desktop platform, and I have to keep Sierra because I have my CME. So I have my CME integration. So I think that CME over the course of the next 6 months to a year is really going to take the dominant role in the marketplace with regards to volumes and open interest. I think that crypto native exchanges will always have an important role because of the decentralized nature of crypto and how it's sort of, it's the reason why, the crypto, I guess the spirit of crypto is, hey, we're creating our own playground. We don't want to play on yours anymore. Unfortunately, you have to play on, if you want the institutions to come in mass, you have to play on their profile, their playground, right? So yeah, I like Sierra, but I'm excited to see XO's desktop. Buenas tardes. Hola, ¿cómo está? Bien, ¿y tú? Ladies, ¿cuántos años tienes trading? That means, wait. No, doesn't that mean ¿cuántos años tienes tú? Mean how old are you? All right. Is it true WAP is pushing BTC up? WAP? WAP? What's WAP? When you say WAP, I'm just thinking of that stupid song. BTC and gold correlation has been a positive 0.45 on the lower time frames recently. So let's look at Bitcoin correlation. Coin metrics. BTC, traditional assets. All right, gold, add, bang. Let's see, the 90-day correlation. Right. Whoops. Sorry, hold on one sec. Am I missing something? The correlation has definitely weakened more recently compared to where we were, going back to earlier in the year. But yeah, this is kind of odd. Why am I not? I don't think I'm doing this right now. I always forget if I have it on. No, on Pearson or Spearman. I have to look into this. I know that the correlation has kind of decreased though, so I don't remember what it was at, Stan. If anything, in terms of recent correlations, Bitcoin has held up a lot more, right? So it's sort of like, I just put it this way, Bitcoin has been the lower beta of the two. All right, I glossed your questions. Where's your questions, man? Hey, all D. First time in stream, super informational. Happy to have you here, Charles. Dave, I don't see. Thoughts on? Oh, thoughts. Okay, I got you, Dave. Thoughts on ETH BTC strength? Good thing to pay attention to, right? One thing that we want to see is, I think that in these kind of current market conditions, you want to grab at any kind of life wrap you can get in terms of market strength, right? And not just as a confirmation bias, but if we still see that ETH is maintaining strength, the good thing about ETH is that there is this sort of rotational nature between Bitcoin, ETH, altcoins, and as I said in the newsletter, ETH is closer to higher time frame levels than BTC is, right? So if we look at BTC from its weekly levels, like we are very far away. Now, ETH is a bit closer to its weekly levels. ETH BTC continuing to show signs of strength. It kind of pushes maybe the argument that ETH is maybe lagging BTC to a degree. And I want to see that in times of, at least in these conditions, when Bitcoin pulls back, it's good to see that other things are not, totally, one-for-one correlation shitting the bed with Bitcoin, right? So ETH strength, not just ETH USD, in particular ETH BTC strength, that to me is a really positive sign, especially if you're looking at some DeFi pairs right now, if you're looking at the market as a whole in terms of not just looking at the market like, hey, Bitcoin represents everything. There's really good reason to assume that ETH will continue to be very strong into the future as well. Like, it's really stupid when people are just maxis for one or the other. So in terms of this strength, it is kind of local, right? But it's good. It's better than nothing. It's much better that we're seeing support at this local area, right? Which you would expect to act as support. Now, obviously, this is a micro consolidation we've been in since the end of November, right? So you do want to see that at some point you at least retake a prior week, a daily swing, whether those more local or complete for the entire range. But this bounce is good, right? It just shows signs of life, right? I think the way that things were negative yesterday, it was as if people were writing this thing, everything off like it was, we're going back into a bear market. But I would take let's say a relatively neutral to stable BTC and an ETH BTC performing stronger as a really good sign especially for alts, for some of the stronger DeFi pairs, because then you're seeing that that there is still capital that is able to withstand the drawdown and is consistently allocating towards some of the better projects and is not kind of just abandoning their post. So don't you think options might overtake instead of CME? Yeah, but I think in order of operations, it's going to be the futures product. Futures product has better plumbing right now. It's been built out longer. It's got more users. Recently, options volume has overtaken spot on equities, for example. Yeah, spot is never going to be as big as derivatives products. So if you have a spot market that's $1 billion, your derivatives market is $100 billion, or trillion, right? Those are just random numbers. It's not obviously reflective of reality. But your derivatives products are always going to well exceed your spot market. So whether or not the CME, whether or not options, for example, options market in equities is bigger than equity futures, right? Of course. But in crypto, most of the plumbing, the structures already built around the futures because they had been built out first. I think that over time, so yeah, I think, to answer your question better, I think that over time, what is the case in crypto, in traditional markets, becomes the case in crypto. Like, let's imagine some crazy universe where this would be scary, where you have the way the market is right now, this crazy universe of altcoins, and hopefully at this point most of them are comprised with working products and companies, and then you have altcoins that have options, options chains for each of those altcoins. Then the options market becomes much bigger, right? So, but right now the futures market is more liquid. It is first come first serve, it seems. So until the options market gains in depth, then it's always like, until it changes, it changes. It sounds kind of stupid, but that's the way it is right now. And I don't expect the CME options to outpace the CME futures. At this current rate, it would have a lot of catching up to do in this year. Mt. Gox, have any effect on your bias? So Mt. Gox, there's apparently a lot of supply that will be freed up, and these people, so it's a scary thing, right? So the thing about crypto is, like, every market has its weird little idiosyncrasies and factors, factor analysis that you have to take into consideration. And one of these is that, so think about it right now. Institutional investors have to deal with, you sound like a robot now. Let's redo, let's see if I can fix this. I don't know why that's the case. One sec, I'm going to take this off. Audio input capture. Delete. All right. Can you guys hear me now? Let me know if you can hear me. So just give me a little bit of feedback. Then I'll get right back to that question. Better? Oh, okay, cool. Or watch, there's so much of a lag that when I pulled my mic off of the computer, it's better now. That fixed it. Okay, good. It's so weird, guys, that I don't change anything, and that occurred on its own. So, anyway, what was I saying? The thing about crypto is, imagine what it's like to be an institutional investor, and you're like, oh God, retail front ran me here. Okay, what I'm going to do is, retail front running is fine. Retail usually gets to front run, and when you're paying attention to order flow in traditional markets, a lot of times you're paying attention to higher time frame order flow. Yeah, you can, to a degree, front run big participants because they take a long time to get into positions. But you're an institutional player, you come into crypto and you have to think, I believe in this asset, but now there's this weird situation where there's a ton of supply that was unaccounted for, or was not going to hit the market, and now we have this Mt. Gox supply that could potentially be hitting the market. And the more important detail of this is, it's not Mt. Gox supply that hit the market at a cost basis of 18K or 19K. It's a Mt. Gox supply that some of these have been locked up since what, $300. So do people you think that if I gave you coin that you got for 300 right now, would you hold it or would you sell some of it? So that's always something to consider. I'm not 100% sure what to completely expect moving forward, right? Maybe they'll maybe it won't be that much of an issue. So I think that so it's a joke when we call altcoins shitcoins, because yes, a lot of them truly are, right? There's no real working products, but that's because a lot of them been around for a really long time. What you're seeing in DeFi now is different. It's actually the case that a lot of the DeFi projects do have things that you could see. They're tangible, not tangible like a product, right? But a protocol or an actual platform. Whereas like ICOs and white papers of 2016-17, it was like nothing. It was like a website that was shitty and had spelling errors and like generic pictures put up last minute to just gain a bunch of capital and no working product. So I think that hopefully those things get filtered out. There's a lot of stuff like that in the stock market too, though. So, but I think ultimately the market becomes a mature market, and See a ton of assets they began as shitcoins and they go on to become, real long-term investments. So, but we're like an hour and 34 minutes into it, so I wanted to keep this on BTC. Just looking at ETH right now against the dollar. ETH is having sort of the same situation, right? Again, ETH is, it's right at its previous daily level that it's lost. Okay, so I don't know what better way to say that right now. That it's just retesting this prior daily low. Now, this is not the most bearish retest so far, though, right? It's not like the market's come up here and then been firmly rejected back down to the low. So you are kind of getting this quasi-acceptance, quasi-consolidation that's occurring. So why is this occurring, though? And maybe it's because, hey, things are still bullish, right? So I'm not guys, I'm not going to be like changing my tune unless we majorly lose this level. And again, you might think, well, that's kind of far. Don't you want to get bearish before then? Well, no, because at this point, it's more than a trend just based on structure. It's a trend based on pace. It's a trend based on, what has been the norms, right? If you look at something like, and also I don't want to write off the levels that we have below us, right? Over time, you could see that we'll dance around this 20-period moving average and maybe reclaim it. Okay, maybe this structure over here is similar to a pattern going back to 2019, where we had this high that did break back down. Okay, so you have a high right here. Initial low. You get an impulsive move down to the low. Everyone's thinking, oh my God, we're going back down here. We have to retest that. And then, you end up making a weird range even higher up though. So, there's nothing has really changed too much. And you're already getting people that think that they know the top is here, and you don't really get a whole lot of that at the top. You get that like, oh fuck, after the top. You don't get a lot of people getting on board with, okay, I'm selling, getting into synthetic USD, I'm calling the top. It's very unlikely. So what's entirely possible is you get something that does look like this. We all get too much behind what fits into that lines up with things that are in our memory base, right? So range always occurs from the first high to the low, and we expect we're going to play around with here. Well, what happens if we're wrong about the breakout, right? What happens if this is not the breakup and breakout yet? What happens if you just do this again and you get accepted up to 2150? And then what happens if this is your range, right? There's it's really easy to always look back at how things have occurred previously and expect that you're seeing that as it's occurring now, and you could just extrapolate from that and say, all right, ranges occur just sideways. It's impossible that we break up. You're discounting too much that the breakout that we're all expecting could occur again just doesn't occur again, and you get another sort of rejection, and then test this area, and then maybe come down to this low. And like I'm saying, guys, it's going to be difficult moving forward. That's, I guess, one of the more points to touch on. I don't know a whole lot about new levels with Bitcoin because they haven't been established yet. I think you have to keep confidence based on trending indicators now, because price discovery beyond this high, it's anyone's guess. People will get it right. You always will have people that got it on the money, but it's not the best idea to try to call the top at every turn. So. Okay, good to know, Chris with a beard. I had an order flow question. If candle prints with large volume and comparatively small delta, all right, so if a candle prints with large volume and comparatively small delta, can I use a small? Yeah, I think you absolutely can. Yeah, 100%. So Stan, I've gone over this before. It's like the way that people look at the market before they get into order flow is they look at absorption as that, right? You see, let's say you see a big spike in volume, and you get a candle like this. What is that? That's huge absorption, right? Even if you have up to this point, let's say you have big volume, right, and big corresponding candles, and then here you have huge volume and you have a little candle, right? Yeah, you can build off of that, absolutely. It's saying, a ton of participation came in. The delta doesn't have to be crazy, right? Because technically, if you have a lot of volume, you're going to have a lot of, delta is just the difference between aggressive buyers and aggressive sellers. You have a lot of volume come in, you still have a lot of aggressive. If you have even, barely any negative or positive delta, right? Let's just say it's not as one-sided. The higher the volume, the more overall either way, you're still going to have a ton of participation. So yeah, when the market doesn't move from the participation as a whole, it's telling you a lot. And that's one of the reasons why, specifically actually, just touching on this, that's why using a volume-based candle is really useful. So a volume-based candle, you can immediately know now, right? Okay, where's the liquid areas, where's the illiquid areas? So absorption up here, why? Well, look at all these tiny candles. Now, each one of these candles is created off the same amount of volume, though. It's all created off of 5 million contracts. So if you have, big candle in a breakout, you have big candles, because it only takes so much volume to move price through the level, because there's nothing in the way. Now, once price starts to come into a level and print multiple candles, well, now you're suddenly printing candles on the same amount of volume. You know that, 5 million contracts. You get a lot of them. They're a bunch of small candles. It's showing you that there's absorption, right? So that's one of the reasons why I like to occasionally pull out the volume chart as well. The volume chart's useful to help, you could use it to identify icebergs. There's plenty of tools for that. Plenty of reasons to use it. So, but yeah. So, everything comes down from the things that are more surface level, such as looking at volume like this. But then we refine. That's the reason why we look at footprints. That's the reason why we look at some of these better tools, because they give us, more detailed examination of what's occurring. And so the volume, volume candles, for those of you that are new. If I have candles now that are printed, not off time, but off of volume, let's go to 10 million candle. So this candle right here and this candle right here, they were printed based on the same parameter, same criteria. And it's that we have 10,000 contracts, 10 million contracts traded. But this candle moved further than this candle. So 10 million contracts traded over here, 10 million contracts traded over here. Well, when the candles are really expansive, it's telling you that it didn't take a lot to move price, right? Versus candles where there's a lot of candles accruing, it's the same amount of contracts per candle, right? And you're printing a lot of candles. It's telling you that you're having a lot of volume come into that area for not really much change. All right, guys. I'm going to wrap it up, though. It's been a pleasure going on 2 hours. I'm going to give away the $200 in Bitcoin to a lucky winner. So today's question, remember, it's a for those who answer first. All right. So this is something that's come up recently. I've gone over this a few times. I share reading material. Now, this is a term that often gets conflated with one thing, but really refers to another when you get more specific. And it is the term, and for someone who could give me the closest definition of what I'm referring to when I say the term, what is market microstructure? What are we talking about when we're talking about market microstructure? Let's see. I would put Jeopardy music on, but rest in power, Alex Trebek. First person to answer wins. How much of a lag is there? Or is this the lag as everyone Googles it? No. 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 See, everyone thinks that it's this one thing because they're commonly... Yes. They are commonly, good job, Stan. So you guys you're all kind of wrong in the same way, and Stan is the closest one to get to it. So, all right, yeah. So Stan was the closest one to get to it first. Yep. All right, cool. So Stan wins the $200. So market microstructure has to do with the order book, trading engine, all of the dynamics that take place between buyers and sellers. And when we're talking things like measures of liquidity, depth, it's not. It's how the market is structured in that regard. It's not how it appears on the chart after interactions have occurred. Stan, this came at 9 o'clock last night. So I have about 4 or 5 books on market liquidity. So so just a little bit of background on this book. So this is called Market Liquidity Theory, Evidence, and Policy. It's by Thierry Foucault, Marco Pagano, and Elsa Roel, I think, if I'm pronouncing those correctly. This is all on, this touches on, market microstructure. I actually know a good amount about this already, but this is sort of like the academic shit you're reading when you are studying financial markets in college, whether you're an undergrad or a graduate student. But I like to recommend books to people. I like to give away books to people, and I really like when other people put me onto books that I am not familiar with. So I saw this and I was thinking, this would look good on my bookshelf. No, I'm just kidding. I figured out what the hell would be a good read, right? It would be a good read, not too heavily into the maths, I don't think, which a lot of market microstructure and books on liquidity get into, the really complex calculus. But this is a lot about theory too, so I figured that this would be a good, interesting read. Yeah, I like the cover. It is a beautiful cover. It's a nice cover too, Stan. It's got like that velvety feeling. So, all right, Stan, send me your Bitcoin address, and we will go ahead, or Bitcoin or USDT or USDC or whatever you want. And congratulations, everyone. Have a fantastic evening. I will see you guys on Friday. It's pretty casual on Friday. Keep things cool, calm, collected, and casual. And that's that. Trade intelligently. Be smart. Let's just look at this again. So, in terms of price action, just to top this off, what I really want to see to get behind the strength of this moving upward is the beginning of something that starts to show evidence of just something simply like this, right? You have a consolidation impulse. This is a trap, right? Rips back up. Where I want this to go correctly is when you get something that doesn't necessarily, this could come all the way down to this support, but ideally for the strength, you see that prior resistances maintain as support. So an under-over structure would be something more along the lines of, less violation of previous structure. So something like, this. Dump, bump, reclaim. And very well, this could have been offering, great short-term trades. But this could be a smaller subset within a larger subset that prints ultimately the same thing we're looking for. So it could be that, this is premature, that you put in another, good low, and then you have something where in the higher time frame, that's what we're building. So one of the things is, don't get so zoomed in. Sometimes you look at it and you go, oh, this is it. It's developing. And then you're like, oh, fuck. I was looking at the 5-minute chart. So just keep that in mind. Remember what time frame you're looking at and how this normally develops in previous areas within a higher time frame market chart structure, and that it's something that takes a little while longer, and we're not just going to take the first trigger. All right, guys, have a fantastic evening.